I think if you're looking out beyond the next quarter, and that's what we were talking about with the member stuff, and start looking at what 2019 and 2020 look like for this company, they've benefited for a very long time by being one of the first and really only streaming companies. A lot of the competition has started to catch up a little bit. I think some of that competition is really going to intensify as we get into late 2019 and start looking at 2020, because we're going to see a lot of the Disney stuff roll off of their catalog, and we're going to start to see Disney Plus come out and see what the appetite is there for consumers.
Right. And that is something they actually address directly in their shareholder letter, is that, a lot of investors and analysts are really focused on this competitive piece of, like, as you mentioned, Disney Plus is a big one. Disney has a huge content library, and they're pulling it all off of Netflix. But Netflix's point was that, first of all, they estimate that at this point they're about 10% of all TV screen time in the U.S., which is kind of a mind-boggling figure that one service grabs that much attention from all of us collectively. But they also note that they really compete with all forms of entertainment. It's not just streaming, but they also compete with video games and all sorts of other stuff. And they even said they're losing out to Fortnite because Fortnite's been so popular lately. But yeah, I think their kind of point is that people are focusing too much on other streaming services as competition when entertainment is really fragmented. So what they're focusing on is really just delivering a valuable experience to the members that can justify what those members pay each month and potentially price increases going forward.
Yeah, and I actually talked about this on a show that will be going up Tuesday with Dan Klein. We were doing kind of a look at what to expect from Disney in 2019 and 2020. And we talked a lot about Disney Plus. And, if you're looking at services that have, a monthly cost of $12, $10, Disney said they're going to be pricing below Netflix because of the content library differences. It's pretty easy for consumers to have several of them and kind of look at, okay, I'm willing to have HBO, Netflix, and Disney Plus, but I'm going to cut my cable and just pay for internet. I don't know that any of these services are mutually exclusive, but we haven't gotten to the point where a lot of consumers have a lot of these different packages from all these different providers. I think that in the next year or two, we'll start to see, okay, how many are people willing to kind of navigate between and pay for all at the same time?
Yeah, I think that's going to be interesting too, because there are a ton of services coming out, and the appeal of cord cutting has always been, you get rid of this $50, $60, $70 cable bill, and then you pay $10 a month or Netflix or whatever it is. But when you start adding 3 to 4 to 5 streaming services between HBO Now, Hulu, Netflix, Disney Plus, whatever Apple does this year, like, you basically get right back up to that $50, $60 a month, which kind of offsets what you're hoping to save by cutting the cord to begin with.
Yeah, I think that the future of streaming and what consumption looks like is really just cable in disguise. It's cable in the sense that you have, various packages that you're looking for. And instead of them being channel packages, they're the service packages. It's you deciding whether you want Netflix and Disney Plus or just Netflix because of the content that's on there.
And I think the key is going to be, like, as long as Netflix can, they're not exactly mutually exclusive, but there is certainly a limit. Like, no, people aren't going to sign up for 10 different services, right? So I think the key for Netflix is, as long as they can always be a constant in that mix, that people will always prioritize, okay, Netflix is a given, we want that. And then they go off and choose between the other ones of mix and match which services appeal to them the most. But as long as Netflix is kind of like the core staple that everyone subscribes to, I think that's, going to be the key to it as competition heats up.
Yeah, they benefit from the brand name. I think they benefit from being the first mover. It is so closely tied to the streaming phenomenon in general. The idea that Netflix is the default, I think that helps them out so much.